Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk 360 degrees trades. Here are a few images from my life in a village in Thailand. These images are available on my website superiorprofit.co under the images page. I am Sagar Nandi, active trader in multiple markets. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use Q systems for my trading. Let's start with charts of instruments that often move the market. US dollar ETF UUP. As of Friday's close, it has broken the trend line support in daily, though it is still having a higher low. When price was here, or even when price was here, I anticipated that it would create a higher low and go up. From this higher low, it did go up a bit. However, after Friday's comments from Fed chairman, UUP sharply came down and market sharply rallied. If this low is also breached, then the next support is likely to be one of the later watermark support levels. That is some distance away. As of now, looking at the weekly and daily, we have to be bearish on UUP, and that may help the market. How far is the distance from Friday's close to the previous low at this point? Metastock has a measuring tool that is very useful, and I already checked it out. It's about 2%. Slightly less than or about 2% drop. That's a big drop for UUP, and if that happens, that may help the market. Does it mean it is time to buy? Not for me. Why so? Because there are some changes in the market, and also the market is extremely overbought. I will come to both of those points as I progress in this webinar. Let's look at the mega cap custom index that always influences the market. And earlier I mentioned that it would not be easy to take a short trade in mega caps, and it was true for multiple market level ETFs also, because there were trend line supports, and in this case also the yellow direction line support. Price indeed stopped right at the trend line support and went up from there. Friday everything was bullish. Mega caps were also bullish. However, a big change in the market is that mega caps are now quite a lot underperforming the market. So much so that this week, for the week as a whole, in fact, mega caps are down, and it also has a bearish headwind possible reversal signal in weekly. How do I use that in my trading? If the daily trend line support is broken, and if that is broken, probably the yellow direction line will also break at the same time. That will be a time to look for shorts in mega caps. More so because now we have a bearish headwind in weekly. However, not yet. The trend line support has not broken yet. If it breaks, I may look for shorts. That is a big change in the market, that the mega caps are underperforming and they are actually down for the week. Surprising, isn't it? Market breadth internal health check. Usually the market follows the internal health, not the other way around. Total view, the broadest view of the market. Here I noticed something unusual. We already had the confirmed Hindenburg not so long ago, followed by irrational exuberance, Bango signals, thanks to Mr. Ian Woodward, who developed these signals. May him rest in peace. And on Friday, we have a large accumulation count. 4, very large in fact. If you notice from this Phoenix, after which came a large accumulation count of 6, the largest possible accumulation count, we had only one other accumulation count of 4 along this long period of rally. But there is something unusual other than that. That is a large accumulation count and one Eureka, that is a follow through day, again developed by Mr. Ian Woodward, thanks to him, may him rest in peace. A follow through day has come at market high, at all time high for certain market pockets. And I went back into the chart. I don't have decades of data here. Dr. Jeffrey may have more, but I did not find on the data that I have on this chart. I'm not going to scroll back, but I could not find a single time when after series of confirmed Hindenburg without any dip below the 50-day moving average came one Eureka signal. That is unusual. Eureka after a market decline, which may happen after confirmed Hindenburg, and Eureka coming after Phoenix, that is a buy signal. What if Eureka comes at all-time high? Is that a buy signal or is it irrational exuberance? Notice though there is no Bango signal, but it does feel like irrational exuberance. If not that, it certainly is extremely overbought. So I wanted to share that I have not found an Eureka coming right after a series of confirmed Hindenburgs. Unusual. And when something unusual happens that I don't understand, when the market is extremely overbought, I don't want to buy stocks. And that is why, though market was very bullish on Friday across the board, I did not want to take long positions. In terms of 3-month new high low, thanks to Dr. Jeffrey Scott, after watching whose videos I started using it, this colored line has hit the extreme overbought level. These two horizontal lines at the top, those are extreme overbought levels. These are extreme oversold levels at the bottom. When it hits extreme overbought levels, as it has done now, you can go back and check. Invariably, that plot comes down. What does that plot mean? Coming down means some stocks must be coming down from very high level. Those may give lucrative shorting opportunities, but we have to find actual shorting opportunities, and those will start once the 3-month new high low starts to come down. It has not come down yet. It just hit extreme overbought condition on Friday. These 4 accumulation counts on Friday, where did they come from? And we'll see the change in market stance from here also. It came from Nasdaq, NYSE, small cap, mid cap. Didn't come from the 2 pockets, S&P 500 and Nasdaq 100, which are mostly influenced by mega caps more than the others. That also shows that mega caps are weak and large caps are also probably weaker relative to the small cap, mid caps. Let's look at the other breadth charts, composites and major indexes that I posted already on Twitter. To save time, let's look at them. Nasdaq breadth, we have the Eureka from Nasdaq. We saw that in total view. Total view is a combination of Nasdaq and NYSE signals, and now we can see the Eureka. Very unusual to see that at the market high, all-time high, came from Nasdaq. And if we look at 3-month new high low, both for Nasdaq and NYSE, it has hit extreme overbought condition, not a situation where I would like to buy. If I look at the major indexes for small cap, once again 3-month new high low has hit extreme overbought condition. Same is true for mid cap and even for large cap. Nasdaq 100 has not hit the 3-month new high low overbought condition. That again shows that mega caps are underperforming. Large cap tech stocks are probably also underperforming. Not bearish, but they are underperforming. So 5 of the pockets, small cap, mid cap, large cap, composites, 2 composites, 5 of the pockets have hit extreme overbought condition in 3-month new high low, and that is also shown in total view. That is not a time where I'd like to keep buying. Market external view, this is how most people around the globe see the market. Notice the market ETFs here on daily interval. All of them were up on Friday by large percentages. IWM almost 4%. The weakest ones were QQQ and SPY, but they were also up by huge 1.5%. Interestingly, equal weighted QQQ and S&P 500, that is QQQE and RSP, went up by bigger percentages than the market cap weighted QQQ and SPY, showing that mega caps were again relatively weaker. But I want to show you some other confirmation that something has changed in the market. I just showed you the daily performance of the market ETFs. If you look at the weekly performance of the same market ETFs, what a big surprise. QQQ is now down for 2 weeks in a row. Surprising, isn't it? Looking at Friday's market rally, who would guess that QQQ is now actually down for 2 weeks in a row? And also the mega cap ETFs, whether you look at MGC or MAGS, they are down either 1 week or 2 weeks in a row. Clearly something has changed in the market that small caps are doing better. And if you now look back, when the market was starting to calm down, I mentioned that when the mega caps were starting to come down, I mentioned that market does not need to necessarily come down if the underperformers that time started to outperform, and indeed that happened. It happened so much that it is extremely overbought, and that is across the board. Let's look at the market ETF starting with SPY. I already checked. On intraday basis on Friday, SPY made a new all-time high but closed just below the watermark resistance. It's clearly in an uptrend, and as I maintained before, it will not be easy to short it because there are multiple trend line supports and also the yellow direction line support. Clearly in an uptrend, and QQQ we already saw for the week QQQ is actually down. Though the candle shape is indecisive, that is not bearish. Friday was of course up, and again we will not be able to short unless this trend line support and then this yellow direction line support is broken. Clearly in an uptrend, all the market ETFs are in uptrend. DIA, remember when DIA was struggling somewhat around this time to make a new all-time high, I mentioned that it will probably go up and make a new all-time high. Now it has clearly done that on a closing basis also, very clearly. But it is overbought. I would not like to buy now, but it is certainly bullish. IWM, small cap, very bullish, very much outperforming the market, above upper boundary in daily, very bullish, no doubt about it. There is no question of shorting. I will not be surprised. And remember the UUP chart, UUP is looking bearish. The next low was about 2% away from Friday's close. If it hits that next low, it will not surprise to see IWM going up and taking out this previous high. Very bullish, absolutely no doubt about that. But it is overbought. That it is overbought, we'll see it from more angles. For example, from QH, bucket analysis, thanks to again Dr. Jeffrey Scott. I made it real time, extremely valuable. Pinpoint reversal points with remarkable. So remarkable that it is sometimes difficult to trade based on it. When the market is so bullish, how can one start to think about shorting? No shorting now, but how to even start thinking about shorting. That is because it works with remarkable accuracy. When the bucket analysis was oversold last time, not so long ago, just a few days or weeks ago, I mentioned it was time to start to find buy candidates. That worked beautifully. And now if bucket analysis is showing extremely overbought condition, it will certainly be a time to start to look for, but not yet short, but start to look for short candidates. It also has sector industry stock breadth. It shows where the market came from, where it is now, where it may go next, and that breadth also shows extreme overbought condition sometimes. Let's find out what it is telling now. Bucket analysis, 20% of S&P 1500 stocks, a nice mix of small, large, mid cap stocks, are above upper Bollinger Band. That itself is not overbought. It has to be 30-40% around that. However, there is another way that Q edge shows extreme overbought condition, that is if too many stocks jump to above upper Bollinger Band in too short time. So whenever this percentage goes up by more than 10% in one day, it is going up too fast and that move may not be sustainable. What happened on Friday? It did not go up by more than 10%, it went up by more than 20% in one day. That was a lot of stocks going above upper Bollinger Band in one day. That is also extremely overbought condition, and it is certainly bullish. 82% stocks are above mid Bollinger Band, but it is extremely overbought. By the way, I have Q Edge running on one monitor throughout the day during market hours, and if you did the same, you would notice on Friday on real time basis it actually hit more than 30% also, the extreme overbought level from where a pullback is likely. That's also a reason I am cautious about buying stocks. And sector industry stock advanced decline breadth. Now across the board from 1 month to one day everything is bullish, and this also shows extreme overbought condition when all the pie charts are around 80% or more, and except these two pie charts everything else is meeting that criteria. So it is, you may say, for all practical purposes signaling extremely overbought condition. Are there more extremely overbought conditions? Let's find out. From Finder technical breadth, we only profit by buying stocks going up or shorting stocks coming down for directional trades. And QFinder technical breadth shows the overall posture to adopt and allows easy drill down to find low risk trade setups. It also shows overbought oversold condition sometimes, and let's find that out if it is showing that today. Weekly technical breadth, bullish across the board, and this is extremely overbought. When all the pie charts are here at 80% or more, then it is extremely overbought. So it is also showing extremely overbought condition. Daily technical breadth, of course it is very bullish across the board, no doubt about it. Even the momentum signals are very bullish. So it is difficult to short, but it is difficult to buy also. Market level summary, the most important trading decision is whether and where to buy or short, or whether to stand aside. Market is clearly bullish, no doubt about it, and even if it starts to pull back, it will not be easy to short, at least at the market level, because all the market level instruments, mega cap custom index, market ETFs, everything has nearby trend line support. Those are not easy to break, so it will not be easy to short anytime soon. At the same time, it is so extremely overbought across the board in terms of 3-month new high low, in terms of bucket analysis, in terms of technical breadth, that I am unwilling to buy at the same time. What is adding to my decision not to buy is this confusing signal, to me at least, that an Eureka has come at all-time high or near all-time high right after two confirmed Hindenburgs. I didn't find any occurrence of that earlier, and when something is confusing in the market, market level is most important. We all know that, and I try to follow that also, which which is not the same thing. Knowing and following is not, but I do try to follow. That's why I am not willing to buy and I am not willing to short. Therefore, the logical option left is to stand aside. Review of last week's trade ideas. Only one trade idea I shared in the last market recap, that was Biohaven, Biohaven, here, BHVN, biotech stock. It gave a buy setup on this day. I shared it in the last market recap. I didn't have a position on Friday, but during the week I took a position. I don't remember, probably on Monday itself. when it opened little bit lower and started to go up. I might have added to some position at the low. I noticed on Friday when the market rallied, it rallied, but the rally was stalling. It had a sizable gap up open, you can see. But right after the open, it started falling, and I was tracking that in the pivot chart, intraday real-time 5-minute chart. Let's look at that. It opened with a sizable gap up. This was Thursday's close. This was Friday's open, but then it started to come down. I had a small loss as of Thursday's close. As of Friday's open, I had a small profit and it was eroding, so I did not wait. I in fact tweeted about it that I closed the position with a small profit. I am a short-term trader, so I decided to close the position because market was looking extremely overbought. The chart is not looking bearish, but that's fine. The market is so overbought, I decided to close it, and I did share it on Twitter at that time. In any case, I closed the trade with a very small profit. This week's trade ideas. I am not willing to share any trade idea. I'm not going to record it. Even if I share something, usually I have the habit of recording a trade idea on the left panel of QElite. I will not do that, but I will share two stocks just to show that in this market, if you look for buy candidates, there are many in different industries. In fact, in terms of industries, if you go back to QEdge, on Friday, 96% of industries are up, 100% sectors are up, 91% stocks are up. So you can find a stock in any industry probably that is giving a low risk buy setup, and I will show two, but those are not trade ideas. I will not record it. Let's start with this stock, Pitney Bowes, PBI. You could find them from top-down analysis or bottom-up analysis. They are in QFinder. Let me show you. If I go to QFinder with a single click, PBI went up by 4.6%, but it didn't give a trade setup on Friday. It gave a fan out pattern, but I was tracking the stock earlier, so I found it. Let's look at its fundamentals. Why I was tracking the stock? Because it is an undervalued stock with very large earnings growth, 800%, and it's a profitable company. On Friday also 100% of PR stocks went up. I in fact had a long position earlier, but that was earlier. Let's look at PBI. By the way, let's go back. Let's look at its industry score. Is it required? I want to make a comment. When almost all the industries are up, market is so much up, 100% of peer stocks are up for PBI, do I need to look at QEdge? No harm, right? At least we look at it. But whether relatively it is the strongest or not probably would not matter because market is so bullish. So it is bullish, it has some acceleration, not one of the strongest, not one of the most accelerating, but that is okay. Still the industry was up by a massive 4.3% on Friday. That's why we have to read the signals in the context of the current market. Current market is so bullish that you may probably find buy candidates in many industries. So PBI industry is strong enough for me. Fundamentals are great. It's a 3-star buy candidate. Has some dividend yield also, 2.7%. Earnings is some distance away, doesn't prevent us from trading it. Let's look at the stock. Stocks weekly, daily at a glance charts. Nice, isn't it? Went up from near trendline support with bullish flow. Weekly backdrop is bullish in color. Candles are bullish in shape. But it did not trigger a bullish flow setup on Friday. Does it matter? No. Does it mean I missed the trade? No. If I use Q system or you did not, because Q is designed to signal entry at a lower price level, but after it starts to move up. So it was going in an uptrend, came back, started to go up, and this was the day it signaled a go with flow trend following long setup. That was this day, Tuesday, right? On Tuesday. So if you carried out the bottom-up analysis starting with Q Finder, you would find PBI as a buy candidate on Tuesday, not on Friday. And you would probably book some profit at the high on Friday. That is why I was tracking PBI. Already I noticed it, but I did not buy it on Friday. You could, or I could buy it on Tuesday itself. That is the way Q systems setups work. They are designed to enter at a lower price level. By the time many others are finding the idea to buy the stock, we tend to book at least a partial profit. So anyway, it was very strong fundamentally. At that time, the industry was also strong. I looked at that. So that's why I was tracking. Now also it may be a buy candidate, but I do not want to buy because of the market condition. Another stock I want to show you, just to emphasize that there are stocks in many industries that could be bought. That is Progress, PRGS. This one probably has a buy setup today because I was not tracking it earlier. Let's look at the Q Finder. Or did I? Let's look at the Q Finder. Yes. It has a PRGS, has a flow trend following long setup as of Friday's close, went up by 4.4% on Friday, and it has other attractive patterns. It is at price extreme low. It has a squeeze move pattern, also a fan out pattern. Let's go back to its fundamentals. Undervalued stock with high earnings growth and high revenue growth, even more strong in terms of fundamental. PBI was 2-star, and this is a diamond. It's not only undervalued with high earnings growth, but with high revenue growth also. PBI did not have positive high revenue growth. It's a profitable company. Again, 100% of peer stocks went up on Friday. Systems software industry. I may look at the industry score, but as I mentioned, it would not matter when market is so strong, but no harm looking at it. It would not look at as good probably, and this is what the point I wanted to make. It's not really one of the strongest, but it is improving, showing some acceleration, and when an industry is up by 2.7%, there is nothing weak about it. Relatively, it may not be one of the strongest, but that is fine. It still allows buying. The stock is fundamentally strong. It has a buy setup. Let's confirm that with the charts. PRGS. Beautiful, isn't it? Why? Because instantly I noticed something that you already know is a powerful pattern. It came to jump thrust low, price extreme low, and long before Friday's Fed chair's comments, it started to show big move up 3. And interestingly, the first trend following long setup in daily at least came on Friday. The weekly is not meeting the requirements of the flow setup, by the way. The weekly needs to be in bullish color, so that is not meeting the flow trade setup requirement. So that way it does not have a flow setup. But again, if you remember the other analytics, after a bullish headwind, which was not a buy point, if we have the first flow signal, that is a low risk buy setup, that's an entry point. So in that way you could buy at the close of this day, and on Friday it again dipped a little bit, went up, you could buy at Friday's close also. However, I am not willing to record any of them as a buy candidate because I don't like to buy stocks when the market is so extremely overbought, neither do I want to share them. I just wanted to make the point that if you wanted to buy, I don't, to be very clear, but if you still wanted to buy, there are attractive looking stocks, whether you are looking at PBI, not at price extreme low, or PRGS, which is at price extreme low, or if you wanted to look at 52-week high, all-time high, you would find buy candidates in those stocks also. But that's not how I trade. So I am not recording it on my TradeStation panel. If you carry out the 360 degrees analysis using Q like that, you will most likely find other trade candidates today, just as you would almost any other day. Thanks a lot for attending. I look forward to seeing you in my next webinar. Have a great weekend, and as I always say, as these live examples I'm quite confident shows, there is no reason not to do that. Trade profitably. Thank you.